partner TA update. I'm going to be diving into XDC, so Zinfin again today for my second update on this project. Now, I think what I was saying last time, sorry if you can hear some noise in the background, by the way, I've just hoovered and it's a bit dusty, so I need the window open so I can breathe. But yeah, so what I think is potentially going on here, you know, catching up from the other update the other day, I was saying, look, this is on the weekly time frame. You've got this 20 EMA, okay, which you've been under since you lost it, basically. You've been under since you lost it back in October 2021. You can see that this yellow 20 EMA has always been your sort of rejection point whenever you get near it. Okay, but right now we are doing something a little bit different here. Okay, and I'm going to get into that and show you why. Okay, so normally what happens is you can see that so from the high in August 2021, okay, we came down and we lost that 20, didn't we? Okay, we met a support level. We fell back to previous support here. Okay, and you can see we bounced up at that point. But we have a technical target. So basically we formed some sort of rising wedge here. Okay, and the technical target of that was the retracement back to this low, of which then you turn that into resistance, okay, because you did come back and retrace to this low. Okay, so you normally, once you come down, this was an ABC. Look, let me show you. Okay, so we had something like this. We had an A, a B, a C wave. Okay, and at that point you form this rising wedge. Okay, and you came up in this rising wedge, but you lost support of it. So when you lose support of the rising ascending support level of the rising wedge, you tend to you basically go back down to where you started the wedge. At that point, okay, XDC lost it, put in a new low. Okay, and within doing so, it basically first it retraced back into that area of previous support, turned that to resistance, okay, and then had a further ABC. So I hope you can see what I'm getting at here. ABC, rising wedge. Okay, this is just basically a breakdown of where we've come from and what's happened. Okay, so ABC, a rising wedge, retested the rising wedge, lost it, turned that to resistance in an ABC, and came back down. Okay, so this was your ABC. Okay, and basically formed a lower high, and within that, from that point, okay, you started back to retracing back up from that level up to the 20 EMA again. But what you did here is you created something called a bear flag. Okay, so you've got this ABC rising wedge. Okay, you lost support of the rising wedge target you was meant to hold. Okay, turned that to resistance, fell down to a newer low, and then you sort of coiled up in this bear flag. Okay, and when you had the bear flag, you had a technical target of the breakdown here. Okay, so this bear flag would have been something like this. Okay, the bear flag like this, and you had this ascending level of support, and basically you have a technical target which is from here to there. Now you can see that when you lost and you met resistance and finally fell through that bear flag, you met the technical target to a T. Okay, so this is where we're holding the local lows now, right here. You can see we even had a wick to it on the 5th of September. So we've met the target of this bear flag. Okay, and that's basically been the breakdown pattern. So you've got the bear flag here. That's your flag. This is the handle of the flag. And then wherever you start to run into the flag resistance and break down, that's your target. And we met that to a T. And that's why you're seeing a bounce off of this. Okay, so from this low in June, you bounce back up to the 20. Okay, and again, just like you have previously, we've been rejected multiple times. Okay, we got rejected, but look, you can see you've came in and you've held support here, okay, of the bear flag. Whereas in previous corrections, you came up in the bear flag and you didn't hold support. You lost it and met a new technical target. Down here, you had this ABC. You came up here, but once you actually lost support and lost it, you fell further. Right now, we've lost the bear flag, ran into the 20, but come back and found a higher low. So that's bullish. To me right now, it looks like we are starting to form a bottom out sort of structure here. Okay, because we've met the bear flag target. Okay, as I said, you came in for this correction, you had the bear flag, and then you had the bear flag target down here. We've met it, run into the 20, but we've came back and held a higher low. We haven't done that previously. Okay, we were coming down, met a target. Okay, once you ran up and came down and lost it, you didn't come down for a higher low and retest. You met another downside target. Whereas here, we've met the 20, come down and held it. Okay, so we're looking for a push up. I do think that also within all of those patterns I just explained to you, there's waves within waves. So you've got, again, all that contributes of this 1, 2, 3, 4, 5. So all of that all of those playouts were basically patterns in patterns in this Elliott wave theory 5-wave correction, I do believe. So yeah, I mean, for me right now, okay, sorry if that explanation was a bit I probably went over a couple of things a couple of times, you know, just to give the reassurance in my head, I think. But I hope you guys understood that breakdown of the correction to where we are now. So you can see that right now, okay, we're sort of in this channel on the weekly time frame here, but technically you've got a low and you've got a higher low, okay. You've ran into this 20 as resistance. Right now we do need to see a break and a close above 0.03605, so get that in, because that's the resistance we're currently meeting right now. And you can see that what's going on here is a potential double bottom with a higher low, and you're looking to retest this 35 cent area, sorry, 0.035 area, okay. But equally above us we do have this 20, okay. And as you can see, whenever you actually run into it, sometimes you do get a bit of overextension from it, but you do tend to get rejected, or for the last 3 or 4 times you have done, okay. So is this time going to be the one where you get the breakout? Who knows, okay. But that's the price we need to see ourselves get back above for any sort of continuation. If you start closing above 0.036, okay, it's bullish. If you come down and close below 0.02486, it's bearish, okay. And you're looking to retest the lows you put back in June. It's as simple as, it's a game of support and resistance. As I said, right now you're in this channel, okay, and you've got EMAs coming down on your head. You're getting some sort of squeeze because you've got this ascending level of support here, okay. You've got the EMAs coming down on your head, and you're basically being coiled up, okay. I think a break is going to come relatively soon. So as I've mentioned, okay, we're coiling up in between this sort of distance here, okay, where you've got ascending level of support, and as I said, you've got this EMA sort of creeping down on your head. So right now you're being squeezed into this sort of compression corner, and I think a break will come relatively soon. I really do think within probably the next couple of weeks a break will come. Equally, if we do meet resistance at this 20, you could see you would be building up, as I said, like some sort of horizontal here as well, where you could run into the 20 right here, get pushed back down to this ascending level of support, hold that, and then come and then test the breakout, and you've got some sort of triple bottom potentially that you'd be having here with a technical target breakout from the technical target breakout. If you was to tackle this resistance and get above it, you'd have a target to roughly around wherever you break it, because this is a descending level of resistance, but wherever you break it, say for example we break it somewhere around here, okay, you're looking to retest previous support levels as resistance basically. Okay, so this was previous support, you came up, met the 20, right now you've come down and you could be looking to run back up into that as resistance, okay, but at the same time you'd be tackling this high. So for me it would still be bullish, okay. So if you did break out, you've got a technical target up to a price of around 0.04235. I do think this will be met with resistance with a potential little overshoot, with the actual target as 0.044. Okay, so that would be the breakout target for me. Okay, so I'll get that on again and I'll put that in the charts for you. If you do see XDC, sorry, break above this sort of this resistance line and close above the 20, tackle this high, okay, you are going to come into a squeeze here, and that is your potential target to the upside, of which you can see on the weekly. This 55 is sort of creeping down. You may potentially, if you do get above the 20 and hold it, be retesting that 55, okay. Because once you do close above the daily, the weekly, sorry, I've said the daily a couple of times, this is the weekly time frame. Once you do start closing above the 20 EMA, okay, and then holding previous levels of support, you're looking to retest this 55 wherever it may be when it's coming down on you. A lot of projects are already doing the likes of that. So, you know, for me, again, that's your technical target to the upside. If you do lose support, you can see that potentially, if we did something like this where we're coiling up like this and you're putting in lower highs, equally you could have some sort of descending triangle, okay, where you've got this level here. I'll get this in for you. Equally, if we do get continuously rejected at this 20 EMA, for example, and we do come up to it, get rejected, and we keep hitting our heads on it like this, okay, and you're coming down holding this support, and if you keep doing this and get squeezed into a corner right now of this level of support here, you could be in a descending triangle target and still be being pushed down by these EMAs, okay. So if you fail to get above it, you will have a technical target to the downside of around roughly another 30%, okay, and you'll be losing this low, which would be very negative, and you're negating the fact that this is some sort of bottoming out structure where you're looking to come out and break out. In fact, you're looking to have lower highs here, get squeezed, and you could potentially break down. Okay, so that's the downside target for me. Again, just to finalize here. Okay, break above, break and close above the 20-week EMA, and close above 0.036. You're looking to come up and retest this 55 as it's coming down, I do believe, because you'd have higher lows and higher highs if you was to break out of this level. That's bullish structure. Okay, so that's the potential there. Break above this and you could be retesting the 55, and equally that horizontal that I showed you a minute ago where you're getting the squeeze for the breakout. The bearish scenario is if you start to lose this level of support here, okay, at 0.024, you are looking at, I do believe, some potential descending triangle occurring here where you're meeting resistance, holding support, and you will have a breakdown target, as we showed of before, should roughly be there to there. You'll be looking to come down to a price of around 0.017. Let's see if that gives any confluence on the Fibonacci here. Okay, so we're chasing from this high back to this low. Yeah, so look, you'd see if you was to lose this low here, okay, and lose this 786 level right now, lose 0.02217, okay, which is your June low, lose that, it does look like you're going to come down to the 1414 here on the fib. Okay, so if we do get price compression here, squeezed into a corner, and we do lose this level of support right now, okay, that for me is your target to the downside. Okay, that's the target to the downside. Just to get the target to the upside again, you just go from there to there. The upside target, and you'll come up to the 55, would be at 0.053. So there's sorry if I'm seeming really confusing here, guys. Okay, but there's a lot at stake. Okay, break above the 20, close above this level of resistance. You're looking at a long to the 55. That's the bullish count. Lose this low. Right here, this support, and lose ultimately the June low. It looks like you're coming down to retest these lower ends of the fibs right here, and these would be minimal 1272, my minimal target, with a potential extension to the 1618. Okay, so you'd be looking at a 30% drop, okay, if you lose the June low, or if you break above this 20 EMA and start to close above 0.037, you're looking at a long up to the 55. Okay, guys, so I hope you enjoyed today's update. I'm sorry if I go over things several times. I need to, I think, structure my videos a little bit better. But I am trying to provide you the best of content, and trying to show you both sides of the equation. And I hope you enjoyed today's content, though. If you did, please do like, comment, and subscribe. Until next time, from Chart Nerd TA, peace out.